Mary Ross Gilbert is going to help me out here. Bloomberg Intelligence Senior Equity Analyst covering retail. Okay, Mary, what did you make of Macy's quarter, and do you invest in your face?
Of course I invest in my face. That's why beauty has been the outperformer for almost anyone who announces, including when Dillard's came out with their numbers yesterday. So with Macy's for the quarter, they beat their estimates on sales and on earnings margin, so sort of across the board. But the focus really wasn't on how they did in the fourth quarter. It's really their new plan. That was the big focus, the new plan and their guidance for the year. So their guidance came in softer than consensus. And I guess it's just no surprise just thinking about how department stores are under pressure. And we've seen it across the board with, again, Dillard's showed some weakness yesterday. We're seeing it with Macy's in their outlook. But Macy's has a plan to address the department store model in shuttering 150 underperforming stores, and then they're going to invest in the 350 remaining. And those are going to be primarily in A and A plus malls. And what they're going to do is increase the service levels. Beauty has been something they've been investing in almost every year and expanding the floor space dedicated to beauty. So you'll notice that if you walk into Macy's, you'll see that they have expanded the space, and who knows, they could expand it again this year. We've been seeing it for the last 5 years that space has been expanded. So there's a lot of details in what Macy's is doing. It's something they need to do. They really need to up their game, and that's exactly how they started their presentation. And that includes really making the assortments a lot better than they are. Because if you look at the inline store performance at malls, they're the ones that are executing, such as the Abercrombies, the Urban Outfitters, they're outperforming.
So, Mary, I was kind of surprised to see this number of stores, 150, because I kind of thought that this decade-plus long shrinkage of department store footprints across the country by a lot of different companies, that was more or less kind of we're done that, or we're at near the finish line. So to see another big round of closings, that kind of surprised me. Did it surprise the market at all, or is this something that analysts and investors have been asking for?
Question, Paul, because I think they needed to close these stores, but what Macy's had said is we don't need to close stores except for the usual stores that you close every year, which is maybe less than 10 per year. But the reason that they've decided to close them is because these stores were underperforming, but they were still profitable on a four-wall basis. So historically, their thought was, well, if it's still profitable and we're still generating cash, we'll keep it open. And this time what they did is they took a more holistic approach and said, okay, even though it's four-wall profitable, we could do a lot better with the funds that we could generate closing these stores, selling the real estate, and redeploying it back into the existing store base and for all the initiatives that they have going forward. It makes a lot of sense because let's face it, we really need to rethink the department store model. It has to evolve.
Mary, does this do enough to get activist investors off Macy's back?
That is a good question. I think it may. I think the board has made it very clear that they are supporting this plan. Could they enhance the board with additional directors? That could be a possibility, so we'll learn more about that in the coming months. But I think that this plan it's been decided that this is the move forward. And when you think about what's happening with the activists, it usually involves the real estate. And what we have seen in past transactions is the real estate is usually milked, and it can be to the detriment of the retail operations. And so sometimes it's not always the best move. So Mary, but they do have valuable real estate here.
Talk to us about like a relative performance between like a Macy's store and a comparable Bloomingdale store. Is the Bloomingdale store materially more profitable, I guess?
Yes, they don't disclose the profitability on Bloomingdale's versus Macy's, but Bloomingdale's outperforms, as does Bluemercury. This year, their comp sales were down 1.6% because the aspirational luxury consumer is spending less. And we've been hearing about the overall luxury business being impacted, especially after we came off the post-pandemic spending from stimulus checks that really had that aspirational customer going after luxury. So now that that's kind of, falling back, we're seeing more of a normalization. This is something Nordstrom also cited. So their sales were just down 1.6%, but they think that could probably stabilize and go higher next year. And of course, with the beauty side on luxury, that's posting positive comp sales. So that's stronger.
Yeah, Mary, I was going to ask about then the inventory. Macy's notoriously last year struggled with inventory. The last quarter we saw they really got it together. What did we learn this quarter about their inventory?
Yeah, so even though inventory was up 2% year over year, it's still down over 20% versus 2019. So they've really done a great job reducing their inventory, and that means that they're having less clearance activity. This is something that's going to affect their first quarter because last year they had more clearance and this year less. So they're doing a great job overall. They've just been improving their execution with data, technology, logistics, and they talked about that on the call. They're going to be even employing some generative AI. They've already been employing machine learning. So we'll see more, and they're going to be streamlining operations. We didn't talk about that, but they're going to be consolidating some of their facilities. So they've reduced layers within the management structure. So overall, simplifying the operations. So all of these things could restore positive growth in 2025.
Mary, who's the retailer out there that you think is doing the best job?
Of all of retail or just within the department store space?
Just kind of within your coverage, because you cover a broad range of the retailers.
Yeah, so I think that what we're seeing right now is some of the inline specialty retailers are doing really well. If you look at what Ralph Lauren has done, Ralph Lauren is outperforming. But what they did was they sort of retrenched the business. They do supply to Macy's and other department store retailers and with their wholesale business, but what they did is really focus on DTC, direct to consumer. This is something other brands have been doing as well, but Ralph Lauren cut back on off price. They cut back on wholesale. They elevated the product so it's much higher quality, and then they've elevated the overall consumer. Mm-hmm. And so it's much more of a luxury brand now, but they also do have, some aspirational brands in their portfolio like Ralph Lauren, which you'll find at Macy's. And then you'll find Polo Ralph Lauren and Double R Ranch in their Bloomingdales concept, for example.
Hey, Mary.
So I think Ralph Lauren's a good example.
Mary, we appreciate it. Thank you very much. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst who covers retail, joining us on Macy's.